So for November 2021, question number 1A. The transaction for March 1st, we started the business with 100,000 shillings in cash and 900,000 shillings in the business.
Hi, Hannah.
Hi, Washara.
Yeah, you can continue. You become the teacher all of a sudden.
What happened? Marimo just disappeared, or it's network issues?
I think it's network issues. How come we are the only two of us?
Also,
Why is
what
everybody?
happened to the other guys?
This class,
I think also it's the timing.
but it's already 8. See, the other classes, the evening classes normally ends at 8.
Yeah, that's what I'm saying.
It was
Probably,
very for people.
yeah, maybe like me, I had a class from
Mhm.
from 6 to 8.
Mm.
So it's from the other class to this class.
Yeah, there is no class which extends beyond 8.
Yeah, exactly. Probably guys are maybe cooling off before they come in. I just
Yeah,
hope they'll come
18
in.
minutes, 18 minutes down the line.
Yeah. The way they're usually active and on time.
Uh,
One guy is asking, Linky Koapi, what's happening?
hey, are we going to do this?
Which one?
As in, we are going to survive. You know, I've never stepped in the physical class. I'm
Yeah,
relying on this one.
even me, I've never. That's why I'm on this one.
Mhm.
Because I started late also.
Ah,
I think this is my third class now.
eh,
So yeah, that's why I really want to be in this class so that I can be able to catch up and also not lose
you
so
have to be.
much.
There are no other two ways. For
Yeah.
me, you know, I had gotten, I wanted to do like 3-4 units,
Yeah.
almost completing. I'm in the old curriculum.
Okay.
So I was told about that this thing. I've been avoiding it ever since I started doing the CHRP.
Okay.
So much.
Uh,
I've done it in other units, but
mm-hmm.
it sticks on me.
Mm-hmm.
So I was avoiding it. So when I was going to do learning development or development
Yeah.
management, and then
Yes.
what else am I doing? I'm doing leadership because I've done all the other units.
Okay.
So there's a progression rule. You
Mm-hmm.
have the other units you've not done. That is why
From the from the
so the
beginning, like
only
you have
class
to
which
start on the lower
yes,
parts.
yes, yes. The
Uh-huh.
only class that was available
Mm-hmm.
it was on Thursday, which normally conflicts with another class that I have.
Okay.
So I didn't have an option. As in, I was told to be going for the physical classes. Me, I
Mm-hmm.
didn't have that time to go for a physical class.
Yeah.
So I opted to join this one.
I also opted to join this one because I'm doing the new curriculum.
Mm.
I never got to do, I never got an exemption. So I have to do like everything.
Have you
So,
done it elsewhere? This unit?
no, I've not done it elsewhere. That's why
Mm.
I'm very keen on this one.
Ah, okay.
So when they came up with that rule that we have to do with, the units from,
Have to,
beginning.
to make them follow each other. If it's unit one,
Yes.
and like that, like I'm glad that I changanyad when I started doing the CHRP. I changanyad them.
Oh, because me, I started with section 5
Mm.
and 6, 5
Mhm.
and 4.
Mm.
So right now it's when I'm doing the introduction ones, like human resource development, management,
Mm.
and all that. So I think we are in the same we're in the same scenario. And again, and I said, if I don't do it now, I did not want to do this one, and I understand there's another course still for.
Yes. Mhm.
So I did not want to have the two together.
Okay.
So I was like, let me just do this first, and then I can do the other one.
This is a
Later.
good one.
Yeah,
It's a
sure.
good one. It's a good class. I like
Yeah.
it.
Ah,
Mm.
yes. Actually, you are able to grasp a lot.
Yes, you can focus.
Mm-hmm.
I think Mwalimu is back.
So yeah, Mwalimu, welcome back.
Asante, nimesikia vile mnaniambia.
Eh, No, we are saying this
Okay.
is the best class that we have.
Okay, thank you, thank you.
Yeah.
My internet was disrupted a bit.
Okay.
We start from where we left.
Yes, we can
Okay.
continue.
So we were talking about the transaction that started on 1st March, where 100,000 was in cash and 900,000 in the business bank account to start a business. So in that case, we said money to start the business is supposed to be credited in capital. So you should come to the capital account of the credit. You write 1st of March. Part of it is in cash, and their cash amount, you can see there is reflection there, but it is 100,000. And then what is in the bank? 1st of March, what is in the bank is 900,000. So there is a reflection here, it is 100,000. So you are not able to see that. Then the amount that is in cash should be debited in cash account. So do 1st of March, capital 100,000. The amount that is in the bank should be debited in the bank account. 1st of March, right here, capital, the amount is 900,000. Like that. So you have completed the double entry. You credit the capital, then you debit the respective account for cash and bank with the amount that was deposited there. That is how you treat that transaction. Let us go to the next transaction. On 3rd of March, bought furniture for 300,000 from Furniture Limited. Remember here, furniture is not goods. If they were goods that are meant for sale, we could have debited purchases. But this is a furniture which is only meant to be used in the business for a very long period of time. When you buy a fixed asset like furniture, you debit the furniture. If it was bought on credit, Furniture Limited, who is the supplier, becomes a liability, and that account should be credited. So you should come here and open the two accounts. Open the furniture accounts. Then you also have Furniture Limited. Anytime the business receives an asset, the account should be debited. Whatever you have bought in debit. So you should write here 3rd of March. What you have bought is furniture. So you debit using the name of the other account. The name of the other account affected is Furniture Limited. Furniture Limited. The value of that particular furniture was how much?
300,000.
300,000.
Yes.
So 300,000. Then this is a liability. We owe this person. What we do, we credit that account. That of March, a liability as a result of what? Furniture that we have bought, 300,000. We credit this by 300,000. This is a liability. We owe this person or that supplier. And then the asset, both increase in assets, we debit. The assets, when they are acquired, we debit that asset account. That is all. This document, you have it on WhatsApp in case you want to refer. On March 8th, paid 150,000 for rent by check. And we said that the rule is that anytime you pay the rent or anytime you pay an expense, the expense that you are paying, its account should be debited. We debit the account of the expense being paid, and then we credit we credit the bank if the payments were made by check. If they were made by cash, we could have credited cash. So here, the rent and the bank account will be affected, where rent account is supposed to be debited. Anytime you pay an expense, the expense that you are paying should be debited. So we should come and have the rent account and bank account. Already we have the bank account. What we don't have is the rent account. I'm here on debit. This is on 8th of March. Paid by what? By check. So we shall credit the bank 150,000. So you credit the expense that you are paying. Then you will credit the bank because money is reducing. Anytime money is reducing, either by check or by cash, you credit this. You credit this. But in this case, particularly, we are going to credit the bank because the payment was made by check. So you write here, 8th of March, it has been paid, or we have paid what? Rent of 150,000. Rent of 150,000. This is money out. This is an expense. Expenses are always debited. And then you credit cash or bank. But this one is bank because it was involving a check. If it was cash, we could have credited cash. Let me share again. On 11th, bought goods worth 80,000 by cash. We said that anytime you debit purchases, you should remember to debit purchases. So here what we shall do, we shall open purchases account. Which should be debited. And here we bought these goods by what? Let me confirm. We bought these goods by, we bought them by cash. We bought them by cash. So we are spending cash to buy goods. So cash, because it is reducing, should be credited. And then we debit purchases. And then we debit purchases. Anytime you buy goods, anytime you buy stock, you should remember to debit purchases. So this was on 11th of March by cash. The value, 80,000?
Yes, 80,000.
Yes, 80,000. 80,000. We already have the cash account here. Because we are spending cash, we credit. 11th of March, right here what you spent on. You spent on purchases, 80,000. 80,000. On 17, sold goods worth 30,000 on credit to Amba. The opposite of purchases is sales. Huh? When you buy goods, you debit purchases. When you sell goods, you credit sales. You credit sales. So here, we sold the goods. So sales account should be credited. Which account are we going to debit? The account to be debited here is Wamba. We sold to a customer on credit. When you sell on credit, you debit the customer who bought. You debit the customer who bought. The value is 30,000. The value is 30,000. This is on 17th. The value is 30,000. So we shall come here. Sales account 17th of March. We have sold goods to Wamba 30,000. So we should have an account for who? For Wamba. When a customer is buying goods on credit, that customer is a debtor. That customer is like an asset to our business. He owes us the money. So we debit this person. This is an asset. This is an asset to the business. So 17th of March, the other account is in sales, 30,000. 30,000. Debit to the customer, credit to the sales. On 18th, purchased goods worth 50,000 from Banita traders on credit. We purchased goods or we bought goods. When we buy goods, don't think two ways about this. Debit purchases, and if it is on a credit, the supplier is a creditor, is a liability, which should be credited. Anytime you create a liability, the liability account should be credited. So we have already the purchases account. I did look at the dates. The date is on 18th. The supply is Banita. The value is 350,000. So you come here and record 18th of March. Banita is the supplier. The amount is 350,000. Then you need to have an account for that supplier. Banita account. There is a difference between these two. Wamba is a debtor because we sold the goods to him. Banita is a liability. A supplier who supplied something on credit, his account should be credited because it's a liability. Liability are always credited. So you credit. So 15th of March, as a result of what? Purchases of 350,000. So this is the liability that we have to that particular supplier. So this one is a customer. Customers, when they buy goods from us, we debit them. Suppliers, when they sell goods to us, we credit them. That is the difference. That is the difference. On the 22nd, goods worth 5,000 were returned by Wamba. Remember, to Wamba, we had sold goods. When they are returned by the customer, they become sales returns. And we said sales returns account should always be debited. Should always be debited with the name of the person who has returned those goods and the value of those goods returned. This is on 22nd. Goods were returned by Wamba. Their value is 5,000. So what do? You create an account for sales returns. Which should always be debited. So you say 22nd of March, you are returned by Wamba. The goods they were worth 5,000. Then what is going to happen to Wamba account? Because you have mentioned him here, then the account should also be affected. We were expecting 30,000 from Wamba, but having returned goods worth 5,000, the amount that we're expecting from him is reducing. This was an asset was debited when we sold the goods to that person. But when the amount the person is going to pay us is going to reduce, we now credit that customer. So we write here 22nd of March. The reason why this is reducing is as a result of what? Sales return of 5,000. Sales returns of 5,000. So that is how we consider the sales returns. You debit to the sales returns account with the name of the customer. Then to the customer who is returning, now you credit that particular account to reduce this, so that when we shall be getting the balance, we shall find that it's like 30,000 minus this, the balance is 25,000, which is actually true. That is the amount of money that we are demanding from the customer. Higher. On 24th, borrowed 800,000 from Sharoko. When you borrow something or when you buy something on credit, the supplier of that item is a liability and should be credited. Then you debit what you have received. We have received the money, so we debit bank account. Then we credit the supplier of that money because it is on credit terms. So we shall credit Sharoko Bank and then debit the bank account. So let me open Sharoko Bank here. So what do we do with this? This one should be credited. 24th of March, money was received in our bank as loan, 800,000. That is a liability. The supplier of something on credit is a liability to us. Then we go and debit what we have received. We have received the money. Even if it is on loan, we have received the money in our bank account. Whenever we receive an asset, that asset should be debited. So 24th of March, we have received the money from Sharoko Bank. Sharoko Bank, 800,000. Debit what you have received. If it is on credit, you credit the supply of that item. In this case, is money. We shall credit Sharoko Bank.
Walimu,
Yes.
I have a question.
Yes, Washera, go ahead.
On that borrowed 800,
Yes.
how do I know this money is going to the cash, or how do I know that it's going to the bank?
Anyway, it was a small omission. I agree with you. The question was should be very specific.
Yes.
The question should be very specific. Borrow the money, 800,000, and it was received by, or
yes.
borrow the money and it was received in cash.
Yes.
But in this case, they never specified. Only that, the value or the amount being received.
It can't be cash.
But anyway, even if you put it in cash, nobody will penalize you.
Okay.
Nobody will penalize you for the exam purpose.
Okay. It's still going to balance.
Yes, it will balance.
Still going to balance. Okay.
It will always balance because what you have done, even if you debit bank or you debit what cash, if you have done a credit and a debit, already you have credited Sharoko Bank.
Okay.
If
yes.
you have credited Sharoko Bank and you debit either this or this, so long as you have a debit and a credit, your trial balance will balance.
Okay. All right. I get it. Okay. Thank you.
I agree. The question had a slight omission. You should specify how the loan was received. Was it by check or was it by cash? But I have made an assumption. 800,000 looks a bit significant. Let us take it to the bank. Okay. On the last date, which is 28th, we withdrew 200,000 shillings from the bank for office use. When money is taken for office use, that is money taken to the cash box. In the cash box, that is where money for business use is deposited. So it is simply money from bank to cash. Money from bank to cash. This is how you deal with it. You will come to the cash account. We are receiving money here. This is 30th of March. The money is coming from the bank. What is the amount, Andrew?
200,000.
200,000.
Yes.
So cash is receiving 200,000, we debit it, but the bank is reducing by the same amount and the money is going to cash. So when bank balance is reducing, you credit the bank balance like that. So that is how the ledger accounts were supposed to be entered, but you have a responsibility of balancing them. For those who came a bit late, this is 100,000. This is cash 100,000. I understand there is a reflection there. So if you add the 100,000 plus 900,000, you will get a figure of 1 million. So this is the amount that is missing on this side for balancing to occur. Consider it as a balance carried down. Like that. So the amount that is missing for the on the other side for balance to actually occur, we consider it as a balance carried down. So when we start the next month, 1st of April, it is going to be a balance brought down on the opposite side, on the side that had more, like that. For the cash, we received a total of 300,000, but we paid only 80,000. So 300,000 that we received minus 80,000 that was spent. So as at that end of March, the balance in the cash is 220,000. So that it can balance at 300,000 and 300,000. So this balance of 20,000, it is a debit balance because it is the debit that had more. When we start the month of April, it will be a balance brought down. The point I want to emphasize, this carried down is the closing balance. Carried down is the closing balance. So when we are closing this month of April, not April but March, this is the balance that we close with. But the closing balance is always the opening balance. Brought down is the opening balance. So when we start the new month, 1st of April, when we start the new month, 1st of April, that is the balance that we start with. So the closing balance will automatically be the opening balance for the next month. For the bank, this is a total of how much? 1,700,000. So what is the missing figure there? On that end of March, the balance carried down for the two sides to agree. This is the 350. So it's going to be 1,350,000. So that it can total 1,700,000. So if carried down is here, the brought down will be on the opposite side. 1st of April, the balance brought down, the opening balance is on the debit. Is on the debit. The same amount as carried down. Carried down, brought down, they should always reflect the same amount. For the furniture account, 300 here, nil here. So that year of March, the balance carried down is 300,000. Carried down becomes the brought down. Like that. Carried down becomes the brought down on the opposite side, but below the double lines. Furniture Limited, we owe this person 300,000 and we have not paid anything. So by that end of March, the balance carried down 300,000. That. So if carried down is here, brought down comes here, below this total. On 1st of April, balance brought down 300,000. Then we have an account by the name rent. Rent, here we have 150, here we don't have anything. So by the close of March, the balance carried down 150,000. Here we shall have 150,000. Here we shall have 150,000. If carried down is here, the brought down should come here. It's a debit balance. purchases. This is the total of what? 80 plus 350. That is 430,000, which is going to be our balance. Carried down. If carried down is there, the brought down comes here. I hope now you have understood. 30th of March, the amount to insert here for balancing to occur is the balance carried down, 30,000. You can have 30,000 and here 30,000. Carried down being here, 1st of April, balance brought down will be on the other side. Wamba, we sold goods worth 30,000, we returned goods worth 5,000. So as at that 30th of March, the balance that we demand from Wamba is 25,000. Current down is here, 1st of April, the balance brought down 25,000 there. For Manita, Thirtieth of March, the balance carried down is 350,000. Inside are also 350,000. So we have not paid anything. So when we start on 1st of April, the balance we owe Anita is 350,000. Sales returns. Balance carried down 5,000. Here we have 5,000. Carried down being there, 30th of March, balance brought down is 5,000 on the debit. Rastri Sharoko, the balance carried down is 800,000. We have not paid Sharoko anything, so that is the balance. Carried down here, bring it back to there. Credit side has balance brought down. That is how your ledgers were supposed to be prepared for the candidates. I want us to go a step further and we prepare our trial balance. Chakuta Traders, that is the name of the business. Trial balance as at 30th March 2020. You underline your heading. I want you to note on how we prepare the trial balance. So that is the format for the trial balance. For the trial balance, you'll find that those items that we normally debit when they increase, they normally get or have a debit balance. Like for example, assets. Anytime the assets are increasing in the business, we debit them. So at the end of the day, they will have a debit balance brought down. Those items that we normally credit when they increase, they will normally have a credit balance. Like for example, liabilities. Anytime we create a liability, we credit the liability account. So all the liabilities are going to have the credit balance. Anytime we buy goods, we debit purchases. Therefore, purchases account should have a debit balance. Anytime we sell goods, we normally credit sales. So sales account should have a credit balance. Anytime we start a business, we credit capital. So capital should have a credit balance. So that is the approach, but you can get those balances from your ledgers comfortably. So the accounts that we have, let me have the format first. can have here the accounts that we open. Those that have debit balance, those with the credit balances. But remember, we are dealing with the balance brought down, not carried down. The brought down is the balance that is on the correct side. If the debit was having more, we have it as a carried down on the credit, but when the new month starts, we bring it back. Balance brought down will go back to the side with more. So the accounts that we opened were capital. We have capital account. We have the cash account. We have the bank account. We have furniture account. We have furniture limited. We also have a rent account. We also have purchases account. We have the sales account, Wamba account, furniture account, sales returns, and then Sharoko Bank. I want you to note that simply because sometimes you can just be given a question with these items listed and the balance amount. Without the ledger accounts, you are just given a list of accounts and the amount. You are told to prepare a trial balance. You need to remember capital is always credited, so it should have a credit balance. Cash and bank are assets. Assets, when they increase in the business, they are debited, so these two should have a debit balance. The same case to furniture. But Furniture Limited was the supplier of furniture. This is a creditor. Creditors are liabilities. When liabilities increase, we credit. Rent account expenses are always debited, so it should have a debit balance. The same case to purchases, we always debit when we buy goods. Sales account is always credited, should have a credit balance. Wamba is a customer. A customer is an asset. It should have a debit balance. Furniture is a supplier. Suppliers are creditors. They should have a credit balance. Sales return is always debited, should have a debit balance. Sharoko Bank, this is a liability account. We owe Sharoko Bank, should have a credit balance. That is how you interpret. If you are given these accounts just listed without ledger accounts, you are told to prepare the trial balance. That is how you interpret very quickly. If we had purchases account, purchases returns is always credited, so it should have a credit balance. So you credit that amount. So that is how we deal with it whenever you are given the balances without ledgers. So we use the balance brought down, not the carried down, not the carried down. So for like capital, let me see. The capital, the balance brought down, you can be able to see it is 1 million on the credit. The cash, it is a debit of 20,000. The bank, it is a debit of 1,350,000. For furniture, it is a debit of 300,000. For furniture, it is a credit like that. So you use the brought down balances, as I'm going to list them there. So the capital account, it was credited or it was having a credit balance of 1 million. So we credit with 1 million. The cash account was having a debit balance of 220,000, so we should debit. Bank account had a debit balance of 1,350,000. The balances brought down, not the carried down. Furniture, it has a debit balance of 300,000. Furniture Limited, a credit balance of 300,000. These are liability. Rent, a debit balance of 150,000. Purchases, debit balance of 30,000. Sales, credit balance of 30,000. Wamba, debit balance of 25,000. Anita, credit balance of 350,000. Sales returns debit balance of 5,000. And then Sharako Bank credit balance of 800,000. Then you total. They should agree. Then you add them. You add them. So this is like 1,300,000, 1,350,000. We add them. Plus 300 plus 30 plus 350 plus 800. You get 2,080,000. Debit to 20,000 plus 1350,000 plus 300,000 plus 150,000 plus 430,000 plus 25,000 plus so that is how it should happen. Your trial balance at the end of the day should balance. It should balance. And the reason as to why it should balance, it is because of the double entry. The double entry rule says that for every debit, there must be a corresponding credit. So the total debits that we made in the hedge accounts are equivalent to the total credits that we made. For every amount that was debited, it was also credited somewhere else. For every amount that was credited, it was debited in another account. So the total debit must be equal to the total credits. That is how it should be. That is how it should be. But for an examination purpose, this question did not require you to do a trial balance. I'm just going an extra mile to demonstrate that ledger accounts are used to prepare the trial balance. And actually, it is from the trial balance that we normally prepare the final accounts. Later, we shall learn how to do the final accounts. But the final accounts are drawn using the trial balance balances. So that is how we handle it. That is how we handle it. So I think that is good enough. We also have another question which now I want to leave you with. For June 2019, question 1A, November 2018, question 5A. That is what I want just to show you how you are supposed to deal with this, because they gave you the opening balances. If you read this question clearly, it says that Jakarta Limited had the following transaction for the month of June. So June 1st, we had the balance brought forward. The balance brought forward. The balance brought forward you have for the bank, for the motor vehicle, for MICA debtor, SU accreditor, and cash. So what the candidates were required to do in that case, when you are given the opening balances, you need to start with those balances. So what they were required to do, is this. Allow me to add some part of this. I'm not going to do the entire question, but to show you how to record the opening balances. We had an account for Mike, which we are told is a debtor. We also had an account for Sue, which we are told is a creditor. So we just open the account at last. So what you do with these accounts, assets, you know, they normally have a debit balance. Even from the trial balance, we have seen that. So motor vehicle, bank, and Mike was a debtor, and I've told you that the debtors are assets. They should have a debit balance. So 1st of June, we record that balance here as balance goes down because it is the opening balance. Here we shall have the balance. 1st of June, the balance goes down, you record the amount. Here 1st of June, the balance goes down, you record the amount. Sue was a creditor. A creditor is a liability. Liabilities, they normally have credit balances. So the balance for this person is appear there. So you put the amount as given in the question before you start now on the transactions that took place. So the transactions that took place now will be a continuation from the balances. A continuation from the balances. The balances broke down. If you look keenly on how we are preparing our age accounts, so our age accounts, we normally have the balance broke down. So this balance broke down. If the next month begins, now it is going to continue from there. That is what we have here. That is how they are prepared. So if you are given the opening balances, just remember, assets, they normally have debit balance, so you put those balances on the debit. Liabilities, they have a credit balance, you put them on the credit. If you are given an expense, you know that it's supposed to have a debit balance, you debit them like that. And then you continue. Later on now, you are going to incorporate the transactions that occurred in that month. So the transactions for the month, now they will continue. Now they will continue from there. Any question up to that point? So this, if you are to go to preparing the trial balance, this one will not balance, simply because we don't have the capital here. We don't have the capital account, but that is not important. You are only told to prepare the relevant ledger accounts. So don't bother yourself, just go incorporate this. Both motor vehicle worth 1,400,000 on the credit from Chomo Motors. You just debit motor vehicle, you credit now the Chomo Motors. You open an account for Chomo Motors. On Ford, both goods, you debit purchases, you credit the bank because they were bought by check. Received a check of 75,600 from Mike. When you receive a check, you debit to the bank, then you credit Mike. You credit the Mike. The amount of money you are to receive from Mike is now reducing. And then paid Sue. When you pay a liability, you credit bank, like in this case, because it is by check, you credit either bank or cash. But this one, if you are going to credit the bank simply because it is by check, then you debit Sue. Remember, Sue was credited. When you pay, now you debit Sue, and then you credit the bank. So I want you to do that. On 24th, bought furniture, you debit furniture account, you credit furniture, the supplier. Paid the Chomo by check, you credit the bank, you debit Chomo. Remember, Chomo had initially been credited on that here. When we bought motor vehicle, we debited motor vehicle, credited Chomo. But when we pay Chomo now, we debit him. We debit him. And then we credit the bank because it is going to reduce our bank balance. And then you have your ledger accounts, balance them very fast, stop there. Don't go to the extent of preparing the trial balance because the question does not require you to do so. So I don't know whether you have got a question. I want you to do the remaining questions. And then I request that we meet tomorrow instead of Thursday. We meet tomorrow evening. On Thursday, I'm planning to travel in the evening, so I might not be in a position to conduct the class, but we can make up that class tomorrow, kindly. The same time, evening. Then on Thursday, we won't have. Is that in order, class? Is it in order? We compensate Thursday's class by tomorrow, that Wednesday, from the same time, 8:15. Are we in agreement? Angela? You are still silent. Can you tell me, are you okay with that timing?
Mwalimu, for me, I'm okay.
Can we assume the others are also okay?
Yeah, for me, I'm also okay for tomorrow.
Okay, let us then make up that class tomorrow. Then on Thursday, we can have a rest. So enjoy your evening. Try those questions. When we meet tomorrow, I will start on a new area now. We also look at some of the past paper questions that have been tested. Then all shall be well. So that is it for today. Enjoy your evening.
Mwalimu,
Yes,
I have a question.
yes.
These questions, when we do for trying, are we supposed to submit, and then you can mark for us so that one can see where they are, or we
Yes,
can
you
come
are-
and revise them in the class?
You can share.
I can share on your email.
Not necessarily, even if it is WhatsApp.
Okay.
You can scan it, share with me on WhatsApp. I can see where you have gone wrong, and then I can correct you.
Okay. Thank you.
Okay, welcome. Enjoy your evenings.
You too.